Good Friday, which it is. It's a Good Friday. It's an options expiration. Today's date happens to be 8/20 of 2010. The timestamp right now is at 9:30 a.m. Pacific Standard Time, 12:30 Eastern Time. What we would like to do is update our SMF Street Pro Trading staff and our worldwide international trading division, which, just remember, for those international folks around the world, SMF Street is waiting on you. You qualify to trade an SMF Street account, nor do you have to be a citizen of the U.S. to be involved with stockmarketfunding.com. One of the things that we are going to point out here to our people at Stock Market Funding is that when we had the summer rally that started back right after 4th of July, your wonderful Independence Day, we had this very weak rally that I was talking about, and basically they were trying to get where this blue line, which is this right here, that's called a 10-week moving average now, folks. And basically what you had was they had come up on light volume, pushed it up through the 10-week, and that purple line is the 50-week or pink line here. And basically you got a closing doji there. We put in the top, then bam, we came down. Now, SMF Street has a mathematical system that is used to tell you exactly where the stock trend is, from a bear trend to a bull trend, or from a bull trend to a bear trend. And it's quite obvious here that one of the qualifiers was that the 10-week, this blue line was going down. It would have to stop and it would have to flatten out, and it did. But the qualifier, the SMF Street trend qualifier and trend management, is that I had to close 4 consecutive weeks above the 10-week. It didn't make it. You had the body here 1 week, 2 weeks, 3 weeks, but guess what happens? On the 4th week, you sold down through the 50-week and you slightly closed below the 10-week. Now what we're going to do is talk about a secondary bear trend that would qualify if I have 4 weeks below the blue line, and if the 10-week rolls over again, a double dip, meaning going down in value, descending, mathematically going down in value, that the current support level is right here, which is the SMF weekly pro trader bar. When I get down here to that 1050 level and I don't bounce off of that 1050 level and I sell through it, that means if I close below at any time on the S&P and that blue line flips over, the thing about all the bear funds that we have on stockmarketfunding.com, they're there. You could be involved in lots of bear funds, different styles on the S&P 500. You can short the S&P using index S&P put options, and there are lots of other bear ETFs that qualify for you folks to be involved at a low dollar capital risk to take this reversal down. What will end up happening on the S&P, as far as SMF Street system says, and we have a good system, 1027 down here is going to be the lower end if we breach that 1050. So if I close below where this little bar, half of the SMF Street bar, if I close below it, that means that that's going to be new resistance. And I would come down, we would break below the body of that 7/4/2010 there, and it's somewhere right around 1028. Let's make sure that we have the exact number for you. And by the way, I want everyone to understand that the 10-week moving average right now is at 1087.49. No, it's not. I'm sorry. It's 1083.07. It was 10087 over there at the time, and we've fallen $4 below, and we're mathematically going the wrong way, and that's how these trends get weaker. And that's why you need to be involved in those bear funds that we talked about. The summer rally, stockmarketfunding.com, clearly pointed out over here at this top, like we have so many tops, just like we did over here. We said the summer rally was over. And that SMF Street said it was a very weak summer rally, because it was. And basically, all of what happened over here in your summer rally is about to break down. That means what was support up here at 1100 is right there at that purple MA50. It's called a 50-week moving average. And for the new people that may be watching the video for the first time, hey, that's all good and well for you. What I'm concerned about is that everyone in our trading division, as they are short using the bear funds on the S&P 500. So basically, we have the first bear reversal qualifier over here. The qualifier is the 10-week rolls down, 4 weeks closing price below it. And a secondary bear qualifier is in the very making right now, SMF Street. And the thing about it is, once that baby cracks and you take out those last lows, we start getting down around that 980 handle. And we'll talk more about that in our Saturday SMF Street training to make sure that everyone is utilizing the right trade management so that as this S&P can potentially break this line here, is that bam, you're going to see a lot of sellers. Now, granted, you're going into the end of the month, but remember, SMF Street 9 months ago said that the back half of the year going into the fall would be weak, and that we took the GDP estimates down at SMF Street, stockmarketfunding.com, to 1.5%. And if that's the case, that means that current equity prices have a lot of room to fall. The S&P has a lot of room to go down. There is a lot of room to go down. And what's nice about this for the bears that are making money in the market, remember, bears make money and bulls make money. And we make money when there are bear trends. I'm going to show you over here at 900 where the actual rally occurred. Once again, it was confirmed by the SMF Street Pro Trader bar. We got up above half of that bar. We never even tested it, and then we burned out to go higher. And that was back in 09. That down here is ultimately going to be support. Another area of support of interest would be the top end at 976. Like I said, 980, 976 handle. This is where we got support back then. That would make an all-time double bear market qualifier within the yearly range of 2010. Bear qualifier 1, you come up in a weak summer rally, you're going into potentially right now bear SMF Street bear qualifier number 2 of the actual yearly move of the S&P. We shorted that one in the beginning of the year. On our website, we also told people to go to cash here, and we shorted it. And even Scotty told his family members once again to go to cash before the havoc and the ruin would set foot. And guess what? What a great decision that was. Because, you see, at SMF Street, everything about the people that may be viewing this video, you're just as important to us as if you were a trader here. Because we don't want to see you get caught potentially on the very wrong side of the market. And our compassion goes out to you if you have the less educated skills about trend analysis. We do things quite different at stockmarketfunding.com, and you can take a free 5-day trial to get started. We have our own direct access trading platform that we designed over the last 20 years, and it's a mathematical trend analyzer. It's used as a market maker platform. We do lots of things. So we had put out all the ETFs, and this is going to be something for everyone. Once again, all I can do is I can lead you to the water, but I can't make you drink it. So the ones that were led to the water are over here, and you can go to our website and you can find those videos back in April 25th. Is that we told everyone, hey, if you don't know what you're doing and you have this little bit of rally, you need to get out. And how right we were again. And the thing about it is, this weak summer rally right here was weak, and now it's a double, potentially double bear qualifier in 2010. Once again, I will be doing the Dow, I will be doing the NASDAQ comp and the NASDAQ 100, and during Saturday and Sunday's training sessions, we're going to go back and do all our bear funds. Remember, bear funds can be used to make money when bear funds need to be used. And when bull funds need to be used, then you use bull funds. So right now, it's all about the various structured ETFs within the ETF trade management structure, bear and bull, 3x bears, 2x bears. There are lots of them. Lots of them. And you can benefit and you can hedge your portfolio if you're trained correctly. Here's just a little list of some bear funds that we look at. And basically, we're short the financials. There's all kinds of them in here. I'm not going to go into that video right now. However, you can go find it at stockmarketfunding.com. They're all there. And we supplied it to everyone in our trading division, our worldwide trading division. So let's take it upon ourselves to learn and educate oneself about the SMF Street Pro Trading Bear and Bull qualifiers. So basically, your summer rally is over. We said it was over right here. Right there. We were moving up. We gapped up. We said it was over. And remember, folks, anybody can say a lot of talk. They always like to say after it happens. That doesn't do you any good. You got to know why it's going to happen before it happens and what to look for and know what side of the market to get on. And once again, for the people that are outside of the SMF Street network, you are important to us. Because if you weren't important to us, I wouldn't be sitting here wasting my time. I don't feel I'm wasting my time. I feel that we're trying to give you the heads up, and you can always join SMF Street. Remember, the old saying is, you want to know before that move happens here and the continuation of that move, you want to know why the move is going to fail before it fails. That's what it's all about, everyone. And once again, we do care about you. And that's going into a secondary bear trend.